Hello, I'm Dr. Matthew Sim. How are you feeling today? Are you feeling fortunate? I hope you are. If not, you should take up a sport, maybe archery. Go out and exercise, go in the sun. Ipisai. Okay, today I'm going to talk to you about what is the ideal portfolio. There are many portfolios around, but I think for the average investor like you and me, and we don't want to think much, the best portfolio will probably be what John Bogle, the founder of Vanguard, suggested: 50% bonds, 50% equities or stocks. Right? From your 50% equities, you may like to look at what you call exchange traded fund or other funds which are index. Right? If you are living in the US, of course, the S&P 500 index or the Vanguard VOO. V for Vietnam, O for Oregon, O for Oregon. Or you can also look at the Vanguard VTI, V for Vietnam, T for Texas, I for Indianapolis. Or you can look at Charles Schwab. Charles Schwab also has some total market index. So what is important is you find an index fund which is low expense ratio. If you are a foreigner, that means if you stay outside the US, then you should look at whether there's such an index fund in your country. But not all index funds are equal. Some are better than others. If you are living in Britain, you may want to look at the FTSE 100, FTSE, F for France, T for Texas, S for Singapore, E for England, right? If you're in Singapore, it's the STI index, S for Singapore, T for Thailand, I for India. So these are the few, but again, they are not the same. If you are in China, then look at the Chinese index. Okay, now we take a look at the bonds. If you are looking at bonds, where possible, buy the actual bonds itself. Find one that's about 3 to 4% in the long term. Right now, it's hard to get those, but bonds on the long term should be about 3 to 4%. Okay, so but the trouble with most average investors, they can't afford it. So you may need to buy a bond fund. If you buy a bond fund, buy one that is short term and one that buys very safe bonds like government bonds, treasury bonds, bonds, gilts, and so on. That will cover the other 50%. All right, so I suppose that's about it. And what is important is you continue to invest regularly in small amounts. Investing in stocks and bonds won't make you like crazy rich Asian, but it will grow your money slowly, and hopefully it gives you a little nest egg when you retire. All right, see you next time. Boom.